uptick of 14.5%, EBITDA uptick of 23%. Walk us through the key parameters that were, at play this quarter.
So if you look at the numbers, yes, revenue was up. It was up by 17% to 6,477 crores. So, and that really translated to a EBITDA of 965 crores, which is a 27% improvement in EBITDA. We had profit came in at 502 crores, representing a 35% increase. So I think in the healthcare services, it is all about operating leverage and the fact that, we were able to grow volumes in high-end specialties that resulted in this. Hospitals did very well, a growth of 14% in revenues with the revenue of 3,183 crores, EBITDA at 790 crores, representing a 17% increase in EBITDA, and profits for the hospital division at 422 crores, representing a 21% improvement in profit.
And give us a sense, ma'am, as to how occupancy rates have been this quarter. Have they moved at all?
Yes, so the occupancy was at 67.1 and maybe slightly lower than expectations, but there was a 4% improvement in ALOS, which meant that we came down to 3.14 days. If we had been at 4 days ALOS, we would technically have been at 72% occupancy. So we have carefully managed to reduce average length of stay to enable patients to really go home faster and to reduce their bills.
Right. And if you look at your expansion plans, tell me how's that moved during the quarter?
So we opened out Pune. We have 100 beds in Pune and we've opened about 40 beds in Defence Colony. And having done this, in the first quarter of the next year, we will be opening out 1,035 beds. And we will open in Bellinus Hospital in Sajapur in Bangalore. We'll open Sonapur in Kolkata. We'll also open in Hyderabad our Sandhya Elite, which is 350 beds. And after this, we will, in the second quarter, we will open Gurgaon.
And during the quarter, your EBITDA margin was at 15% roughly. That's 110 bips increase YOY. Do you see EBITDA margins inching up from here? Or is this the kind of level that we expect even for FY27?
No, I think you're looking at blended EBITDA margins. So if you look at healthcare services, we're at a very healthy 24.8%. And of course, Apollo Health and Lifestyle is at 10.2%. They have grown their EBITDA margin by 141 basis points. Apollo Healthco is at 4.5%, but that is a different retail business. It is digital plus online plus offline. So at 4.5%, it is a decent margin. However, offline pharmacies are at 7.8%.
And on Healthco, just give us a perspective. How do you expand operations there? What's the expectation?
So Healthco, the two parts, the physical pharmacies have grown. We've added 185 physical pharmacies, and they have a total of 7,113 pharmacies, which technically they are the largest pharmacy network in India today. And in that, they have a private label share of 15.53%, which is giving them the margin of 7.8, a very healthy margin, which is improved by 12 basis points. The offline continues to grow with the GMV of 525 crores for the quarter. And they have three sources of revenue, which, both the insurance, the doctor consult, the diagnostic, as well as the delivering the pharmaceutical products at home, all of them are growing at some at 23%, but growing strongly at 20%.
Ms. Reddy, the health and lifestyle business also saw a revenue jump of about 20% this quarter, right? It is still loss-making, a company, despite an EBITDA jump of nearly 39%. When is it that you expect that business to turn around and turn profitable?
Next quarter, they should be profitable. Because if you look at the different lines of the business, they're all profitable. I think, a little bit of focus on admin costs, etc. They should be profitable, and they're growing the diagnostics scale, which is giving them a healthy 10.8% margin. That margin trajectory will grow.
Right. I recall the last time when we were chatting, you were talking about your plans to expand overseas as well. How's that going?
No, we're not expanding overseas as much as doing project work and consultancy overseas. That has turned out well for us. We have got about 20 crores of revenue from the work that we do in project consultancy.
And plans to look at the GCT market as well?
We work in all markets, but to set up a hospital, no, we're not looking at that.
Okay, and you spoke about the fact that you're going to add maybe 1,000 beds in the next year. What kind of Capex are we looking at in terms of quantum?
So what we've said is currently what I explained to you is 1,385 beds at a cost of 2 crores per bed. So that's current Capex is around 3,000. The next phase of expansion is another 3,000.
Right. And do you need to infuse capital into other businesses such as healthcare, lifestyle, etc.?
Healthco is now, it will become a separate company. It is fully capitalized, requires no further capital. Apollo Health and Lifestyle is looking at some restructuring that will bring it capital for growth.
And are you looking at strategic partners for that?
They are looking at some restructuring, let me say that. And Apollo is always there to support them with capital for growth.
Right, Ms. Reddy. Great to have you today on the show. Thanks for that insight and chat on your quarterly numbers. Let's take a very quick break.